Phillips 66 out with results this morning. The company earning $2.38 a share. That included $239 million of pre-tax accelerated depreciation on its Los Angeles refinery. Revenue coming in at $33.5 billion, beating expectations, and the company saying that refining actually ran at the highest utilization since 2018, achieving its lowest cost per barrel since 2021. Joining us right now is Mark Lashier. He is the chairman and CEO of Phillips 66. And Mark, thanks a lot for being with us this morning. We see the stock is up by about 0.7% this morning on this news, but it is a pretty big turnaround. What you've seen in terms of that realized margin per barrel up by about 12.4%. What happened?
Hey, Becky, thanks for having me here this morning. It's great to be able to talk about the strong results our team delivered in the second quarter. And you think about it, it's really across the board in our major segments. It's really demonstrating the strength of our integrated strategy and our disciplined execution. It all starts with safe, reliable operations. You see that showing up in our metrics. Let's start with refining. We delivered $392 million in adjusted pre-tax income, and that was supported by those high utilization rates you mentioned. We had our highest utilization rates that we've seen since 2018. We've been focused on cost reduction. We've lowered our cost per barrel, and we saw the lowest cost per barrel in the second quarter, the lowest we've seen since 2021. Market capture, we maxed out market capture, and we had first half of this year, we've had our record yield in clean products. So we're putting more crude through our refineries, and we're getting cleaner, higher value products through our refineries every day. And that's been a long journey, and we're delivering those results. Midstream showed up really well this quarter, too. When you look at midstream, we delivered $731 million of adjusted pre-tax earnings. Those earnings were buoyed up by an acquisition that we completed earlier this year. And we also brought on another gas processing plant out in the Permian Basin. And both those things really contribute to our wellhead to market strategy in the midstream business. And it opens up frontiers for more organic growth in our midstream business. So we really like that business. It's delivering results. Then you look at our marketing and specialties business. They went out capturing the higher margins that are out there, delivering higher volumes to the business, and brought home $660 million of pre-tax and net income. Our marketing guys like that 66 number, I guess, so they delivered $660 million worth of value. So the team is more focused than ever on delivering value. We're providing energy, we're improving lives, and we're delivering shareholder value.
Mark, let's talk a little bit about the board fight that took place in May. I mean, this was a big deal that you had with an activist investor. They won, Elliot won 2 seats on the board, you won 2 seats on the board. So how is that playing out? Have you all found any kind of common ground areas that you agree with, and what's the game plan from here?
Yeah, it was a big contest. I will tell you where we're aligned is we know that there's more value to create from the great assets that we have. We're all aligned on creating more shareholder value, maximizing the value of our assets, and we really believe in our integrated structure, our integrated value proposition, and we're going to deliver against that. We added 3 board members, 3 new board members to our board. 2 of them were nominated by Elliot. 2 of them were nominated by us. And they're all great board members. We take our board members, our new board members, through an onboarding process where they get a deep dive in all the materials that they need to understand, all the data they need to understand to drive the value and really challenge us around our strategy each and every day. And they've been onboarded. We've been through a board meeting already. They're well integrated. They're being, they're right there at the table with the rest of our very talented board. I mean, we've got board members that are retired chairmen, CEOs, retired general counsels. We've got representatives that spend a lot of time on Wall Street across the board, and they know that their job is to represent all of our shareholders and focus management on delivering maximum shareholder value for the long term. And they're all aligned, and they're all at the table having those conversations.
Okay, aligned and having those conversations. You said everybody can agree that you can create more shareholder value here. Do the Elliott board members agree how you go about doing that, or is that the big part of the discussion right now?
Well, I would correct one thing. They're Phillips 66 board members now, and so once they're onboarded, their fiduciary responsibility is to all of the shareholders, and they are. They're at the table. They bring a diverse perspective, and those perspectives were out on the table and in the discussion. And We go through a process to examine our strategy almost continuously. We don't just lock and load on one thing. We make sure that something hasn't changed in the macro that could undermine our strategy. And then every fall, we go into a deep dive on our strategy where all the options are on the table. Our board members hold management's feet to the fire. There's no sacred cows, and we deliver on the strategy, and we focus on how to maximize shareholder value over the long term. And I believe these members will contribute to that conversation constructively.
You all made a big announcement last year, Mark, just talking about how you're going to be winding down the facility in Los Angeles, your refinery there. What happened around that? Is California just a place that's too tough to do business? I mean, I think about Chevron actually moving its headquarters to Texas from California and some of the struggles they went through. Kind of wondering what happens to the state if they chase out some of the businesses there.
Becky, we go through a process looking at the viability of all of our assets, whether those assets should be in somebody else's hands or whether those assets aren't generating the value that we need to see. And that was the case with our LA refinery. It's a very old facility. Frankly, it's two old facilities that were combined over the years, about 5 miles apart. There were challenging inefficiencies there, and we were at the point where we were going to have to recapitalize that asset, and we just didn't see the path forward for profitability. So we made the very tough decision to cease operations. And in California, you're required to give about a year's advance notice, and we did that. And the process is underway to cease operations and to redevelop that property. We've got 650 acres right on the Port of LA. The California administration has been very supportive, primarily because we've also laid out a plan to resupply the refined products that will go away. We already did this in Northern California when we converted our Rodeo facility from crude oil to renewable feedstocks. And so we've got the proven ability to bring in feedstocks from outside California, whether it's from our Ferndale refinery in Washington or international markets. We've got the ability to resupply the California market and meet their needs.
But it was a question of not wanting to recapitalize or put more money into the plant because business conditions make it too tough to be profitable in a state like California?
That refinery was our highest cost refinery in our portfolio and wasn't contributing meaningfully to our earnings. And so it was a decision that we had to make.